What is up, everybody? Welcome to the Trader Society Academy stop loss and take profit for hidden divergence video. This is going to be very similar to our shark fin take profit and hidden divergence. It's typically how I manage every trade, but I want you guys to have a clear grasp on this. So I made a video just for hidden divergence take profit as well, and stop loss. Again, welcome guys for being here. I'm excited. We're almost done with this section of the course. And I hope that you've enjoyed it so far. Let's go over what a stop loss is in the Forex market for all you newbies out there. So a stop loss is a function offered by brokers to limit losses in volatile markets, moving in a contrary direction to the initial trade idea. This function is implemented by setting a stop loss level, a specified amount of pips away from the entry price. You guys know what the take profit is by now, but this is a type of pending order that is placed to close a profitable position once the market reaches a specific price. As the name suggests, it allows the traders to set a predefined level to lock in any profits. In other words, it takes profit as it closes the position. So setting my stop loss for a bullish hidden divergence move, when I set my stop loss, I will determine where my take profit is based on the confluence in the market. Again, just like I said, it's just like the shark fin video. It's going to be the same concept on every setup we have. I want to make sure that I have my 1 to 3 risk to reward. I'm going to show you how I would do that in this case. So in this trade, what we can see here, there's a level of confluence. We are hidden divergence at that 50 moving average. As you can see, the markets, if you look at the different time frames, you can tell that it's very bullish in this when it's at this level right in here. We are coming off of that higher high, I would say, but we also have the higher lows in here as well. So when we have all that right in there and we see that we have that hidden divergence, I want to take that trade. For me, because it made that higher high, I want to see it come and make a new high. So my take profit would be 190 pips. My stop loss would be 62 pips. And there will be times that maybe I'm like, I don't like this taking my profit all the way up at that higher high. Maybe I'll take it at that previous high, that level of resistance right there. So as you can see, the market did do exactly what I expected it to do. It came up to that higher high in there, hit our full take profit. Super simple, but we want to make sure, you know, by having that 190 pip take profit, my stop loss is going to be around that 60 to 62 pips, giving us that 1 to 3 risk to reward. So setting my take profit for a bullish hidden divergence move, when setting my take profit, I use that nearest area of confluence or something in the market that's telling me that I should maybe exit the trade at that level. It's going to be discretionary, but you know, we'll be going over this on TradingView. It's something that the market's always discretionary. It's not always going to be super, tells you exactly what it's going to do. You kind of have to obviously pick and see what the market's doing based on what it's telling us it's going to potentially do. That's by looking at what price action is going to do. If it's making those higher highs into those higher lows, then more than likely we'll see it come into a new high. It's just being obvious with what price is doing on the chart, and that's typically how I'm going to do it. So in this case, we have that trend line break right here. We made that new high. We came down to that 50 moving average. We were hidden divergence at that level. So when I look left in here, I see that we have a major area of resistance. That's going to be my take profit right in there because the market's rejected this so many times. That's just me being obvious. Like, now can it come up and make that new high? Yeah, it definitely can, but I just want to be safe and have the least amount of stress that I can have in a trade. So we have that resistance. I'm going to be taking my profit at that resistance. So as you can see, take profit was hit. I think this was right around 600 points, which gives me around 200 point stop loss. And that's just as simple as it's going to be. Obviously it did make that new high, but like We got out, we took our profit, we're good to go on to the next setup. Setting my stop loss for a bearish hidden divergence move. So it's the same thing. I want to make sure that my trade is a 1 to 3 risk reward. I want to determine where my take profit is going to be, so that's how I can determine my stop loss. So right in here we have the trend line. We have the retest off that trend line right from that 50 moving average. We have the lower highs in there. So I was just looking at what we could potentially take our profit at. Now, if I look left, we could probably take our profit right at this previous low in there. But because it is making those lower highs, I think we'll come into that new lower low. So that's where I would essentially take my profit, right at that lower low. We're definitely hidden divergent in there. Let's see how this trade does. So we do have that stop loss of 39 pips. Take profit is 119. Let's see how this trade plays out. As you can see, market did exactly what it was supposed to do. You'll find that be the case on most of these setups. When we have hidden divergence, when we have a trend line retest on hidden divergence, you're gonna see those moves work out. We just wanna make sure that we do have that stop loss and take profit equaling out to 1 to 3 risk to reward on at least every setup. Now you can get away with a 1 to 2, but typically what I would like to see is I'd like to see a 1 to 3. That gives you more wiggle room for your strategy, or this strategy essentially, to lose more trades but still remain very profitable. Setting my take profit for a bearish hidden divergence move. So same concept, going to be looking for the confluence in the market that's going against me. It's all discretionary, of course, but you can figure it out just by looking at the chart and just being obvious with it. So as we can see here, obviously take profit into that low right in there, as that's what I would like. We're hidden divergence, we're creating the lower highs, we're coming off that trend line retest right on that 50 moving average. I want to take that to this area of support in there. Stop loss is 80 pips. The take profit is 244, giving you that 1 to 3 risk to reward. Very simple stuff. Let's see how this trade played out. Obviously played out very nicely. I'm sure after this it came and dunked down just based on the lower highs in there and broke this area of, I guess you could call that support in there. That trend line, same type of deal. But we just want to make sure that we do have that 1 to 3 risk to reward. So now what I'm going to be doing is I'm going to take you guys to TradingView. I'm going to be going over the hidden divergence setups, how I mark it up, how I determine where my take profit's going to be, and just be, more comfortable teaching from a different aspect, and hopefully you guys are learning that way as well. So we'll see you over at TradingView right now.